Hello, I hope you guys are having a great conference so far today. I'm Nathan McGrath, and I'm here to talk with you about a specific case that attorney Milton Chappelle and I have been litigating. It's an important case for teachers and one I think that you'll find pretty interesting because it illustrates how simple changes to the calculation procedure and process of the chargeable fee amount can dramatically change a rebate amount without even needing to use different numbers for the calculation. That's a statement I know right now with no meat on the bones, but it'll make more sense once we get into the substance of the case review. Now, as a quick overview of the case I'll be reviewing for you today, it's a federal class action case that is captioned Thaxton v. OEA. For those of you in Ohio, and a few others of you probably know that OEA stands for Ohio Education Association. That's the statewide affiliate in Ohio. The case was filed in August of 2011 in the Southern District of Ohio. Currently, there's a proposed settlement agreement between our clients and the unions that has been preliminarily approved by the judge. The judge has also certified the classes and class representatives for the purposes of settlement. We estimate that the classes, of which there are two of them, are probably composed of a couple thousand people. In Ohio, as it is in many places, there's a unification of membership requirement. So Ohio teachers pay dues or fees to the NEA, OEA. Then in Ohio you have the district level. And then at the lowest level there are the locals, so 4 levels in Ohio. Our clients in this case are 14 Ohio teachers from across the state who sued the OEA and the district unions. Now the NEA and locals were not sued in this particular case. The allegation against the districts is that they failed to give proper Hudson notices to non-members because they didn't produce proper, independently audited financial statements. But what I think is the really interesting portion of this case is the part that deals with the Ohio Education Association. In their lawsuit, the teachers sued the OEA not over its notice, but over how it calculated the chargeable amount of fees that it forced objecting non-member teachers to pay. The premise of the allegation against the Ohio Education Association was not only that OEA was charging Ohio teachers for expenses that are simply illegal, but OEA was also doing some interesting math when it came to how it calculated the chargeable percentage, which translates, as you know, into the forced fee amount. As an aside here, just so you know, in common terminology that you're probably more familiar with, the chargeable or forced fee amount that I am referring to is usually known as the fair share fee amount. However, I'll continue to refer to it as the chargeable or forced fee amount, which I believe is a more accurate description, really. I just note the terminology here because I want to make sure that you know what I'm talking about when I refer to chargeable or forced fee amount. So anyway, as you all probably know, every year the unions calculate the chargeable fee amount, which is simply the percentage of full union dues that it will charge objecting non-members. For simplicity's sake, say the full union dues amount is $1,000 for a particular school year. And the unions at all levels get together for a specific school district and throw all their numbers into a pot. They stir it up, close their eyes, and out pops a number. Say they determine that 80% of the full union dues amount is chargeable. Then the objecting non-member must pay $800 to the unions for that school year, as that is the determined forced fee amount. Now, the $800 is broken down internally between the layers of the unions based on what each particular union calculates to be their portion of the fees, their cut. Well, when the teachers in this lawsuit originally sued the Ohio Education Association, the OEA was on a pretty consistent basis calculating the chargeability amount in the mid to high 80% range. Now, by comparison, most statewide affiliates run somewhere in the 70s. For instance, Ohio's close neighbor and my homeland, the great Commonwealth of Pennsylvania, in 2012, PSEA, the state affiliate there in Pennsylvania, had a chargeability rate of 73%. So something was likely a bit off with how OEA's chargeable percentage was being calculated, and we could tell that, or at least make a pretty good guess at that by the trends in the unions around the country of similar type and size. Now, by litigating this case, the Ohio teachers were able to make three really significant changes to the way OEA will calculate the forced fee amount in the future, should the proposed settlement agreement ultimately be approved by the court. The result of those changes is that the yearly chargeable rate should probably drop lower into a range that is more consistent with other statewide affiliates. In fact, due to the pending settlement, which OEA has already started to implement on its own, this past year the OEA's chargeability rate dropped about 10 percentage points from what it would have been this year, which made a really big difference in the refunds that the teachers received. Also, as an added bonus, the districts have suspended collecting fees from objecting non-members at this time, and while that may not be a permanent change because they can collect again if they jump through some hoops built into the pending settlement agreement, for now it makes a true and real difference in the amount teachers are being refunded. But anyway, back to the OEA. The first significant change that our clients were able to get the OEA to make was that the OEA could no longer charge objecting non-member teachers for expenses it wasn't legally allowed to charge them for. Now, I realize that what I said sounds profoundly simple and really a no-brainer, and it is. But shockingly enough, or perhaps not shockingly at all, OEA was charging objecting non-members for expenses that were clearly non-chargeable. When we got into this lawsuit and we were able to look through just what the OEA was charging for, we found, for instance, that OEA was charging for an organizing activity that's already considered non-chargeable. Getting some of these obvious violations cleared up began the cleanup process, but the pending settlement agreement goes far deeper, and if approved by the court, will fundamentally transform how OEA calculates their annual chargeability percentage and the amount of forced fees they charge objecting non-members. The second significant change is the creation of an administrative category for the expenses. I think this is easier to illustrate than it is to verbally explain. So here's a graphic for you, and I'm going to talk you through it. If you take a look at the last row of column 3, you will see that without an administrative category, the chargeability percentage for our fictitious fee year here is 90%. The 90% chargeability amount was reached by adding all the expenditures except for the 100% non-chargeable expenditures. In our example, the coalitions and the political campaigns, and dividing that number by the total expenditures, which in our illustration is $1,000. This is an example of the formula OEA was using to calculate the annual chargeability rate, which determines, as you know, the forced fee amount. Now, look in the last row of column 4. You will see that the chargeability percentage drops a bit more than 5%. Why is this? Well, let me explain to you the beauty of the administrative category. It was our client's position that any expenses or activities that were not fully chargeable or non-chargeable should not be used in the initial chargeability calculation. For instance, while Union's facilities may be used for chargeable activities such as collective bargaining or contract administration, they may also be used for non-chargeable activities such as a political rally or campaign prep. Under the old formula of determining the chargeability amount, mixed expenses, that is, expenditures that have chargeable and non-chargeable aspects, were treated as fully chargeable, even though they had non-chargeable components to them. So in my example here, under the old system, the total facilities expense would be considered chargeable, even if the facilities were used at times for non-chargeable purposes. Same with categories such as accounting or IT services, general office meetings, staff meetings, etc., etc. Those can certainly have chargeable elements to them, but they can also have non-chargeable elements. In certain areas, the line between the two, chargeable and non-chargeable, is often blurred and difficult to discern. Our solution was for OEA to begin a new way of calculating. First, those expenditures that went towards what we determined to be administrative or mixed activities or expenditures were withdrawn from the initial calculation. This means that the sum of only the purely non-chargeable expenses, again in this example the political and coalition expenses, and the purely chargeable expenses, in this example the contract administration and collective bargaining, are used to determine the prorated chargeable percentage. In this example, the result is around an 85% prorated chargeability rate. That rate is then used to multiply each administrative category to get the prorated administrative amount. You see that in column 4, which is entitled Admin. For example, take row 1, Facility Operations. Instead of $125 being added as chargeable, as it was in column 3, the prorated amount after being multiplied by 0.85 is $106.25. After you prorate all the administrative categories, you then add all of the column 4 and divide it by your total expenditures, $1,000 in this case, and you get your new adjusted chargeable percentage. It's about as simple as doing your taxes and nearly as fun to calculate. But with that being said, even if the process I just described is less than clear, what I do hope this illustration shows you clearly is how adding in the administrative category component in this way can significantly reduce the chargeability rate and thus the forced fees that an objecting non-member has to pay to the union. In this simple example, you see how it caused a reduction of over 5%. Another thing that the teachers were able to have put into the pending settlement was an off-the-top 1.5% reduction as a cushion. Now, these cushions are often used by unions to pad the numbers in case the union miscalculates the chargeability percentage. The theory is that their voluntary reduction covers any mistake they make in calculating the true chargeability amount, with the hope that if there is any calculation error exposed ever, they won't have to pay anyone back because they can rely on their cushion amount as making up for the difference. For the past year or so, OEA's annual expenditures were in the $65 million range. In previous years, OEA would only allow for a $100,000 cushion. That cushion was pennies compared to the annual expenditures. Doing the math, it was about 0.15% of the expenditures. The Ohio teachers in this pending settlement agreement were able to get the OEA to agree to an annual 1.5% cushion. Now, when you are talking about $65 million, that works out to just under $1 million a year that will automatically, right off the top, be treated as non-chargeable and obviously will be an additional 1.5% reduction in the chargeability rate, reducing the forced fee amount that an objecting non-member will have to pay. So again, the chargeability rate is decreased by adding an administrative category and by adding this cushion. If you want to apply it to the example that we just worked through, that would add to the already reduced chargeability percentage and put the reduction to about 7 percentage points lower. The third significant change the Ohio teachers were able to get incorporated into this pending settlement agreement was to have the Ohio Education Association redefine and either create or delete certain fair share fee or FSF codes. Every expense is given an internal code. Here's an example for you to take a look at while I continue talking. Whether it's a car rental, time spent lobbying on the Hill, a phone call, etc., it's all coded. There are roughly 40-plus codes that are used, and these codes under the old system fell into two categories. I'm sure you can guess, either chargeable or non-chargeable expenditures. However, the first change to the codes that we were able to make was to designate certain FSF codes as administrative. Now, the significance and the need for that should be evident from what I just explained to you earlier, and I won't go through it all here again, but it's obvious that it relates back to being able to pull the administrative activities and expenditures out of the initial chargeability calculation. Now, the second part to the code revisions came from the fact that when we got to take a look at the codes that OEA had been using for years, we realized that there were no codes that were administrative. There were codes that were outdated. There should have been codes that were missing, and there were codes that were so poorly defined they were practically useless. As part of the pending settlement agreement, and if the judge approves it, new codes will be used by OEA in coding their expenses and activities. These new codes we had the chance to comb through, and we worked with OEA's counsel to create codes that are relevant and useful, and most importantly, accurate. The result is that while you can never fully account for human error, it's our hope now that the new set of codes will be employed by OEA in a more precise and efficient manner, which will facilitate more accurate calculations of the annual chargeable percentage and the forced fee amounts. We feel that our work on the codes will facilitate this because we have tightened and simplified definitions, and we've helped to create better codes that will be easier to use. Well, I think that wraps up the overview of this case. If you have any questions at all, please feel free to contact me. You can give me a call at 703-321-8510, or you can shoot me an email at njm@nrtw.org. Thanks so much for your time. I hope that you enjoy the rest of your conference, and it's been a pleasure being able to share with you today. Thanks. Have a great day.